Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. What do we got going on? Well, they keep trying to push the market up, right? They keep trying to push it up higher. Now, maybe we go straight up before the big crash, but I do think we're going to get a pullback, then head up higher, and then the big crash happens. It's not time for the big crash yet. Now, it could. We're getting closer. We're getting closer. How do I know we're getting closer to the big crash? Well, you look at the margin debt, right? Margin debt's at a record high. Everybody's trading with money they don't have. This is a sign that we're getting really close to the crash, right? But this has been the biggest bubble in the history of the world. Now, if you go back in history and you look at the biggest bubbles ever, you got to go to 1929. Biggest bubble in the history of the world up to that point. Now, 1929 was right before 1930. What was 1930? Was the Great Depression, right? So we're right now sitting in the biggest bubble in history, but yet we're going to see the greatest downturn in history. Never going to be a bigger collapse. This thing's going to fall apart at the seams. It's not there yet. Now, it's going to get there, but it's not there yet. Now, I know we're getting closer. I was reading an article, and anyways, it said that 50% of the people making over $250,000 a year, 50% of them are living paycheck to paycheck. Now, how's that even possible, right? Things are expensive and people living beyond their means. There's too much debt out there, right? People are trading the stock market on margin debt. Here's the other thing. 60% of the people making over $300,000 a year are having trouble paying off their credit cards. That's why you're seeing the credit card delinquencies shoot up. What other delinquencies are shooting straight up? Look at student loans. Student loans are at a record high in delinquency, right? Record high. People aren't paying them. They have to start paying them again. Now, Biden said they didn't have to pay them. Trump says, oh, no, you got to pay them. You signed on the dotted line. You owe the money. You got to pay, right? Car loans, 7% already in delinquency. That means 60 days late, 7% of car loans. That's actually pretty high, 7%, right? Okay, what about mortgages? I'll just talk about FHA mortgages right now. FHA mortgages, which makes up about 20% of the mortgage market. FHA has an 11% delinquency rate. That means 11% of the people are not paying their mortgage. Car loans, not paying their car loans. Student loans, not paying their student loans. Credit cards, not paying their credit cards. We're getting ready for the biggest downfall that you've ever seen in the stock market, in the real estate market. It's going to happen all at once. Now, it's interesting to me that mainstream media, right? They're coming out and they're admitting that houses are going down. Goldman Sachs admitting it. Moody's, Bloomberg, they're all saying house prices are coming down. Yes, they are. Why? Because we're getting closer to the collapse. We're getting really close to the big downfall, but not yet. Not yet. There's still liquidity in the marketplace, and they keep trying to pump more liquidity in the marketplace. Matter of fact, our government needed some liquidity. What did they just do? They went out and sold $100 billion of T-bills. $100 billion of them because they needed some cash, right? So they went and sold these T-bills and they got the cash. We don't have cash to run the government. They're flat broke. Now look here's the thing. Donald's smart, right? He knows that he needs to get rates back down to 0%. Why is that? We got $28 trillion in bonds coming due when the Donald's president in the next 3 years. 28 trillion are coming due. Now the Donald, he's going to spend money hand over fist. He's going to break all records. He might spend more than all the presidents combined. He kicked, Elon out of there when he was trying to cut that spending. Got him right right out of there, right? That Donald's an overachiever. Biden holds the record for the most spending ever, but the Donald is going to trump him. And that's why you got to get into the real money. That's why you got to get into the gold and silver. But we got 28 trillion coming due, right? Coming due. We got to get the interest rate down. But who's the buyer? Who wants to loan our government money? Even at 5%, would I loan them money? No. Have to be up around 20% before I started loaning the government money. Look, if they can't pay you back, if they get them down to 0%, they still can't pay you back, and you're getting 0%. Look at 28 trillion coming due, but he's going to spend another 4 or 5 trillion a year. So just add on another 15 trillion that are coming due during his watch. This thing's going to blow. We're getting really close, right? But the Donald, he's got a plan, and he came out with some really good news, right? He signed the bill. It's now legal for your 401k, for your pension plans to own fart coin. You can go out and buy fart coin in your 401k. You can buy the Trump coin, the Melania coin. Elon's coin would be the Doge coin. Crypto is now legal for your 401k plans. I'm telling you, this is going to end so bad. People just don't get it. Right now, we're going up, we're going up. Why? Because there's still liquidity in the marketplace. Now, how do I know that? You can look at the HYG. HYG is the junk bonds, right? And they pushing it up higher and higher and higher, right? That's liquidity going into the marketplace. Now, when the junk bonds start to break down, when they start to break below the 20-day, then the 50-day, then it's time to run for the hills, because then the big rug pull's coming. And I think that we're just going to get a little bit of a pullback, and then they're going to pump that liquidity back into the marketplace. That's just my take. You see, what they're doing is really sick. It's really perverted, right? Now, I talked about this in the last one, how we're never going to have a recession again. A lot of economists agree with that, right? You see, okay, let's look at what a recession is. Used to be, the definition was 2 quarters of negative GDP, right? 2 quarters, then that was a recession. But we did that when we said, no, that's not a recession. So maybe it's 3 quarters now. But anyways, you got to have negative GDP. Now, what makes up the GDP? Let's talk about the 2 largest things. First is housing, right? Well, real estate in general, right? Real estate in general is about 25% of the GDP. Now, contrary to what Dave Ramsey's telling you, I'm telling you the real estate's going to be dropping, right? So that's going to be a drag on the GDP. So what are they going to do to make up for that? They're going to print trillions and trillions of dollars. When you print the money, right, the GDP goes up, right? Now, that's called GDP. What are we at? I don't know, 30 trillion, let's call it, right? All right, so if the GDP's got to go up by 5%, well, just got to print the money, right? You just print the money, print the money. I mean, if you got to get it up there, you'd have to print $1.5 trillion, but you have to print more than that, because it takes $3 of printing to get $1 in the GDP. So when you want to go up by $1.5 trillion, you'd have to print $4.5 trillion. And don't get me wrong, they're going to do that. I mean, it's incredible. But here's the other thing. So it's really sick. It's really perverted, right? I mean, we have been in a recession. If we take away the money printer, we've been in a depression, actually, because we've been going down for quarter after quarter after quarter after quarter, because all they do is print enough money so that the GDP shows a positive number. And that way we never have to have a recession again. Last recession, 2008, 2009, and up until now, we just keep the printing press going, right? We just keep it going, keep it going, keep it going. But you got the real estate market now coming down. So we're going to have to fire up the printing press, right? Fire it up, fire it up, fire it up. Now, here's the thing that could offset the real estate. Okay, so real estate is the largest part of the GDP, right? About almost 30%, let's call it. What's the next largest part? Well, that's the healthcare, right? Healthcare is about 18%. Let's just round up and call it 20%. It's the healthcare, right? So anyways, the more we can spend on healthcare, it helps out the GDP. Now, baby boomers my age, we're starting to get old. We're starting to get sick. We need surgeries. We need things. We need medical care. We need all this stuff. So we can get that healthcare portion up if we can make the country sick enough. Now, isn't that perverted? Isn't that twisted? But if we can get enough sick sick people paying the outrageous cost of Medicare, medical costs, then we can get the GDP to go up higher, and then we're not in a recession. If we can get like 50% of the nation sick, put them in the hospitals, we'll get the GDP up higher. Are we better off? I don't think so. That's how perverted this is. That's how twisted this is. But that's what's going on right now. You got the real estate coming down. You got the printing press running, right? The printing press running to make up for that. But you got the healthcare costs going straight to the moon. The moon boys got that one right. Healthcare costs going to the moon. It's for old people, my age bracket. I'm the younger age of the boomers. But the boomers, we need that healthcare now. And we're making the GDP go up because they're making us sick, right? They can do that. How do they do that? Well, they do that with the food. Be very careful what you're eating. Be very careful what they're shooting in you. Don't want any of that stuff. They want you sick, right? Because it helps the GDP. This is so perverted, so twisted, but maybe we never have to have a recession again if we can just make the country more sick. Give them those processed foods, right? I mean, Big Pharma, they're just loving this, right? Let's make everybody sick. We'll sell them our medications. That'll make the GDP go up. We'll get more medications for them. Twisted, right? I mean, the GDP is going up for two main reasons. First one is that we're printing so much money. The second one is that our country keeps getting sicker and sicker and sicker. Now look, there's no liquidity in this marketplace anymore. It's starting to dry up. Still out there, not time to short yet. Not time for the big rug pull yet. Getting very close to striking midnight on that, but not yet. You got to watch the HYG, watch the liquidity. Now, what really sucks the liquidity out of the economy? Job losses. Job losses suck out liquidity, right? I mean, if you're not getting a paycheck, you got no money to spend, your liquidity on a personal level, well, you're broke and you got to dump your house onto the marketplace, right? I mean, so job losses, they're just spiking up. I do crack me up when the Donald fires the head of the BLS, right? I mean, just because they brought him some bad numbers. Donald, I got news for you. Some more bad numbers are coming the way. Jobs are not being created right now. Jobs are going away. Maybe this AI stuff will create some new jobs, but I think it's going to get rid of more jobs than it creates. That's just my take. I'm not an AI expert. I know it's coming. I know a lot of people are getting laid off because they're getting replaced by AI, getting replaced by a robot, and then they have no job. They have no liquidity. They can't make their payments, can't make their credit card payments, can't make their student loan payment, can't make their car payment, and for crying out loud, surely can't make their mortgage payment, right? So they dump it onto the market. That's what they got to do. You're going to see these assets are going to get really cheap, right? I mean, it's going to be deflationary at first, right? But on the tail end of the deflation, they're going to print money like you've never seen before. I'm talking 20 trillion, 40 trillion, 80 trillion, maybe 100 trillion a month. There's going to be no end to it because there's a bottomless pit. We've never been in this much debt. The bubble has never been this big. The bubble is going to bust, right? We've been pushing the bubble up 17 straight years, not one recession. Maybe we won't have a recession again because we're probably going to go right to the Great Depression Part 2. Great Depression number 1, 1930. Biggest bubble in the history of the world, 1929. Biggest bubble in the history of the world, 2025. Where's the Great Depression? Probably just around the corner. I don't mean to scare you, but the big rug pull's coming. I'd say Great Depression 2026 is definitely not off the table. Now, the Donald, he's going to hyperinflate. He's going to print. He's going to see all the prices coming down, and they're going to print because that's the only thing that the Federal Reserve knows how to do. Once you get those rates to zero, you can't lower them to negative yet, not till the CBDC goes into effect, not till the central bank digital currency goes into effect. Once they get you into central bank digital currency, then they can make the interest rates negative 5%, negative 10%. Basically, it's just the theft. It's a way for them to steal your money, right? But once you're at zero right now, the only other tool they have, they always talk about all these tools in their toolbox, Federal Reserve, right? The only two tools they have is lower rates to zero, and then that tool's gone. Then the only other tool is to print money, and they're going to do it like crazy. See, I think eventually the Federal Reserve, I do think they're going to be going away really soon once people figure out how much money they've stolen from us. I mean, it's incredible. Donald wants Powell out. I think he's going to get his wish. I think Powell's going to leave. We know he's leaving next May, right? Now, is he going to stay till May? Maybe, but in May he's out anyways, and then Donald Trump will put his puppet in there, lower that rate to zero, and we'll see what happens when they get that money printer going. If you like this stuff, give me the thumbs up, punch the subscribe button. Get out there, everybody. Have a great day. Bye-bye now.